Hey, good morning, Forex traders. This is Vance out of Seattle, Washington. Welcome to my live Forex trading analysis and show this morning. Before we get started, again, I just want to show you something real quick so you can interact more. I'm going to be doing, once you go to the show right there, I guess it's on the next page, and you press play, notice that this part right here, be a part of the conversation. Notice that that comes in, click on that, and then you can actually interact with me on the show. I noticed I didn't actually add some links there this morning, but there usually be links to follow me on Twitter and what have you. I need to add those next time. But anyway, you can go to Twitter, search Forex Art of War, one word, Forex Art of War, and then follow me, and you'll find out when these shows are happening a couple of minutes before they start. I don't do them at any specific time. I do them when I'm ready and I've got a good feel for the market. Also, there'll be things like, download free books and what have you. And then pretty soon, I'm going to actually turn the show completely live. There's a little bit of a delay on it right now, but I'll turn it completely live. And if you want to come in and ask me questions live, we can do that as well. So let me get rid out of there. Okay, so let me just get it out of there. All right, so in fundamentals, I took a look around the world this morning. Even though there's a lot going on, with the wars and the the debates on democracy in Hong Kong, the markets have kind of adjusted to all of that. They don't really feel like there's anything impending that's going to happen right now. It could, but they don't feel that way right now. Draghi is going to be holding a press conference in about coming up in a few minutes here at 8:30 a.m. Eastern. But just to give you kind of a recap on all of that, inflation has dropped significantly in the Eurozone. But so far, the word is that it's not enough to change any policies. In addition, he's been actually talking about taking more action with, more liquidity, quantitative easing, and so on. So if that story doesn't change, our sentiment on the euro will remain bearish, and we might see more of a drop today to a new low. There might be enough uncertainty just to kind of keep it in a range, but we'll see. The pound has had some positive data, but the talk of diverging interest rates, while that's still on the table, it's likely to keep downward pressure on it as well. Keep in mind at some point that the story will change and both pairs will correct. And I'm kind of talking about the daily charts and these big runs down. The wild card out there is non-farm employment data. That's tomorrow morning at 8:30 a.m. Eastern time. I won't be around. I don't work on Fridays, but some of you guys will be there. ADP, which came out yesterday morning, showed that there were more jobs than were anticipated. That's a private source of data, so it's not the official data. But if there's a surprise and the jobs are less than what everybody's expecting, whether that's through previous revisions or actual numbers for this past month, that could trigger the correction. That's just a possibility. To start with, some of you have been asking me about Elliott waves. I traded Elliott waves for a few years, and I'll just be honest with you. I only found one thing that was high probability with Elliott wave trading. Yeah, there's a lot to it. I could show you the complete patterns everywhere, but it's a question of probabilities. There's only one part of the Elliott wave pattern that repeats with highest probability, and you see me use it all the time. So I'm going to show you that. Now, during the late Asian session, the euro did correct way up, a little bit more than just a correction. It went probably all the way to 76.4 of this move. But for all practical purposes, it was doing some correcting. But looking at this move, it did have a trend turnover. Let's drop down to the 5-minute chart and take a look at what I'm talking about. So it's really important that you learn how to draw Fibonacci tool correctly. No one basically had any rules like what I developed in 2007. I call it the new wave Fibonacci because it's a new wave advancing the trend. It shows when buyers or sellers are actually taking new ground. And it also helps you to measure the strength of those advances. So in this case, this one's 30. There's 30 pips of strength. Now, usually if it's 18 or 20 strong in a new advance, see this? Boom, new ground. If it's 18 or 20 and this is 30, it's gonna pull back to 38.2 or more and push again. And you can take a look on my homepage, forexartofwar.com. There's quite a lengthy video though, explaining and teaching you how to use this tool. So you can see if we just do this like this, up, down, and up. You can see it goes up, it pulls back to 38.2 or more, and makes the second push. Now, in terms of Elliott waves, and let me just kind of show you what we're looking at here. I'll just complete the Elliott wave visual for you. There's wave 1, 2, 3, 4, 1, 2, 3, 4, 5, and then that would usually be followed by A, B, and then C. Okay, so what I was saying is these, and this would be actually lower. This would be lower. And this would typically tend to be a little bit lower as well. All right, so this first wave, nobody knows, if it's a one wave or a three wave. In fact, nobody really knows if this wave is a three wave until it actually happens. And the best way to identify a three wave is it's just really strong. And you can see this, how strong it is. These waves down here. And by the way, they don't use new waves in Elliott wave technology. So the new wave concept shows you when you've definitely got a wave bigger than wave 1. But the main thing is when you see a strong price move, it's almost always a three wave. And then it's going to pull back. It's going to create a 5 wave, which sometimes goes higher, not always. So there's a second push, a 5 wave that comes up in here. Sometimes we'll go higher. Kind of lately, sometimes it does, sometimes it doesn't. But the 5 wave doesn't have to advance, and this is where there's a flaw in divergence. Typically, divergence is price advancing, but market is weaker. That's what divergence says. So there's a flaw there in that concept. Anytime you have a strong move, a pullback, and a second push, that is the 5 wave. Period. It's the weaker second push following the strong move, and so that's what creates the 5 wave. And then when it pulls back and comes into here, this is what a real right shoulder is made of. A real right shoulder, one that is actually following the logic and human behavior, which stems out of the psychology of this strong move. It always follows. It's always right there. Now, in this case, it's right here. You can see it. There's no distance factor. There's no, in terms of it doesn't have to be in a particular location, a high, a low. It's wherever it is. That's it right there. That's the right shoulder. And then it corrects down right here. So actually, yeah. So anyway, the most reliable, the only thing I wanted to share with you is the reliable part, the thing that's high probability, is this strong move, pullback, and second push. And that's why I teach you guys it over and over again. It's the most repeated pattern in Forex. These other waves, no matter what they be, they are repetitive, but not in any high probability wave. And the problem with that is that if you're basing your trading on a pattern that doesn't repeat with super high regularity, your win-loss ratio is going to be lower, and that's going to cause your drawdown rates to be too low when there's a change in the market. In other words, it's just, first of all, if you're trading with too much risk, it's going to blow your account or at least drop it significantly. And secondly, if you lose, most people, if they lose, 5, 6 trades in a row, they're not even going to stay with their method. It's just too painful. So these are all factors these are all really important factors in your trading that you have to understand and you have to think about. All right. So now let's do somebody make a Control A and delete, and it didn't quite work. Okay, so Control A did not get all of this, but anyway, I'll work on that later. So let's go back out and just kind of look at context. I want to do that with the euro though first, euro 30 minutes, since we're on it. All right, so we had the move up, the pullback, the second push, and the correction. That move is over. Anything that was going to drive that move up has already happened. And so with the overall market being bearish, nothing pointing to more bullish, the thing drops, right? And then it does a little bounce. It's staying in the middle. So that's where we're at right now. We're just sitting here. The market's waiting to decide. Nobody has a clue. We got that speech starting up, well, press conference starting right about now. So at some point, you know, they're not always looking for something to move the market, but maybe they're waiting to make sure that he doesn't throw a surprise at them. My sense is that if he doesn't throw any surprises, this should point to further movement down. However, and this is a little bit harder to see, depending on what investors do in the U.S. today, they were basically pulling money out of a lot of investments yesterday. That could come into Forex, that could not. They could take money out of Forex and put into investments if they're feeling positive about investments, and that could also move the Forex market. But we really just have to watch to see if we get our setup. So let me just put a couple prices on here. Look for a move above 126.61 for the euro, and then since there's I'm going to say this is potentially, if these cross over, you potentially got a trade from here to here. So you just have to watch and see if it fits your range in terms of what you need. And the real strong areas right there. There's 125.93 is where the candle bodies are resolved, and there's a little bit of a buy order sitting down here. And we're starting to see a bit of a move already. You know, maybe they release some minutes. We'll see. Let's see how much. Good 30 pips. So it's possible. Let's drop down to the 5. See what we would need. It looks like it's already retracing during the drop. We're going to have to drop to 1 minute just to see what happened in the last 30 seconds. Yeah. Okay. So you see it started here, moved a wave down. It's pulling down to 50. It's bouncing around here. This is, you know, an obvious area of resistance where there'll be some sell orders sitting there. But you want to kind of stay away from the speculation around potentially hyper volatile data. All right, so we need to wait to see which way the market likes to go. Now, this will not be the starting point for a new wave. It already has. It's already pulled back. Because it's highly speculative, it might reverse. It might make a second push here. We don't know. And so that just happened. Boom, boom. It happened super fast. All right. So you know you're going to need a new point. And the new wave is going to start right there. So I'm going to drop that down before I move. And you're going to look. What we want to see is we want to see this push without pulling back 38.2, which it came within 1 pip. So that's a done deal. It already happened again. Boom, boom. And, of course, these waves are very small. They're 9. So, you know, not a lot to trade. Too small of a range to get in and out with your risk management. So what we're looking for is a wave to move down 20 or more and then pull back. And that gives you, you know, you can't even trade the pound in the United States with a stop loss smaller than 8 pips because you won't have enough usable margin if you're limiting your total risk. Okay, so let's pop out. So just keep an eye on that. It's got to make a firm move over, you know, 30 to 60 minutes and then leave you room to get in and out. Now let's take a quick look at the pound. Wow, my show's going on and on here. All right, so the pound took a move up, touched off of this high where it hit yesterday, stalled, made a second push, and then came down in here. And this was really let's take a look. Let's readjust this bottom. The key bottom right here kind of changed a little bit yesterday to 161.74. So this would have been the key area. And you can see where buyers latched onto that right there. They struggled. They got below it. And once they closed down below it, the buyers were able to push back up to 61.74, but then it took a drop. Now let's see what kind of waves unfolded. Now, the only reason I zoom into a 5-minute chart is I don't trade candle patterns or indicators or charts. What I'm trading is actual behavior. I want to know, did they push down, which if there's a strong price move, the psychology causes people to look for a pullback and then get it again. It just happens over and over again. It's the thing you can count on. So you see it right there. I need to know if that already happened or not. And you can't see that all the time on a 30-minute chart. So you have to drop down and look and see if it already played out. So you can see we've just got little waves, little waves, little waves. So this needs to do something meaningful, you know, a meaningful move without a pullback down into here. So that's what you'll be looking for right now. A move below 61.32 with a new wave that stretches out. Okay, so just a heads up, we haven't made an offer to new members in our program for a couple of months. That's going to be coming next week, so watch out for that if you're interested in our unique coaching. What makes what we do different from pretty much everything else you're going to see out there is the coaching. It's 90% coaching, 10% education. So, you know, it's like, just think of, you know, learning to hit a baseball or learning to ride a bike. I mean, there's only so much education that you need. Then you just have to get on the bike and try to ride, or pick up the bat and swing. And then if you have a coach that says, hey, you need to choke up on the bat, that's going to save you a lot of time. So that's what we do. Education, all this education out there, there's no secrets. But you know, and also more importantly, education doesn't take me any time. I could give you 1,000 hours of education, and you know, it wouldn't cost me 5 minutes of my time, right? But coaching and watching and seeing how you're doing and making suggestions, that's what takes time. That's human energy, and that's what we trade money for. Okay, so members, I'll see you guys coming up just under an hour. Cheers, everyone else.